on, guys? So today I'm going to be going over why retail logic does not work. Okay, so I know most people, when you start to trade, you're basically poisoned with the idea that support, resistance, trend lines, and all that stuff, indicators, and all that works. But at the end of the day, the market moves from an algorithm, and it moves a certain way, and the way it moves does not respect the way retail logic is. There's a reason why retail traders fail 90% of the time, and there's a small percentage of people that make all the money in this trading industry, and those people, they don't trade the way you guys trade, and that's just a simple fact. You can look it up yourself. It's proven. There's a reason 90% of traders fail, and that's because most of them traders are learning the same concepts that everyone else is learning. And there's a reason why 90% of them are failing, because they're all doing the same thing. So you just got to put two and two together, understand what's really happening in the market. And that's what I teach you guys here, the ICT concepts and smart money concepts, whatever you want to call it, that I personally use. So let's just go to this US30 chart, and I'm basically going to explain to you why it doesn't work. So, okay, in the eyes of a retail trader, let's just go back in time right here. So in retail eyes, what do they see? They see this price is holding this trend line up. Depending on how you want to move it, you can have the trend line like this. But then again, why is this trend line right and having this like this? Why doesn't this one also work? So I'm going to show you why both don't work. Okay, from there to here, you can see that it's respecting this. It's kind of pinching into a wedge for a possible breakout, as you guys would know, and then for possibly to trade up to here, right? So let's just see what happens. Let's see if it respects this trend line and comes down here, because in retail eyes, you're expecting price to come down, up, before breaking up to the upside or the downside. So let's see. Price respects it, okay. Comes down, starts rejecting, okay. Let's say from here, now we want to take a buy. Why? Because we're respecting this trend line. We're holding market structure. We're making higher highs and higher lows. So we're expecting price to then push up to this trend line where we can aim it. Right up here. Why would we aim up here? Because as you can see, there's a support right here, or resistance, whatever you want to call it. And you can get an easy 1-to-1 trade if you go in the lower time frame. Maybe it could be smaller. Put it down to here, and then you can get a nice simple trade. So let's see what happens. Okay, starts going in your direction. Okay, starts coming down, stops you out. Okay, so that's one way that I'm showing you. And then what happened? Price starts falling, and then what happens? Oh, now you could change it. You could change that same trend line. Okay, this is respecting this one now. Let's wait. Okay, we're losing momentum. Okay, you try to take this trade now. Why? Because it's doing the same thing, but same place, same target, higher risk to reward. Okay, you take this trade. Let's see what happened. It's doing the same thing, respecting these lows. It's still in this overall uptrend. Let's see what happens. Stopped out again before pushing up. I wonder why I did that. And then what happens from here? I guarantee you, after taking these stops out, now price is gonna push up. Now you're sitting here like, you're looking back in time like, what could I have done? What could I have done? Maybe I should have had my trend line here. Maybe I should have saw this support right here that was being made to possibly bounce off of that. But that's the thing. All of these things, you could easily change your bias, and you don't know what's really working and what's really not. So now you're looking at it like this. You change your bias. You see that it's being support resistance right here. You got a support right here. You're expecting price to possibly, if it trades above here, to push higher, to trade up to here. And if it pushes lower below here, you're expecting it to trade here. So let's see. Okay. Breaks through. So now it's rejecting. You're expecting price to possibly push up. Why? Because this is support and resistance. This is classic what people are trading. Let's see what happens. Taking a buy off of the support. Stopped out again. Then what happens? It comes down here, pushes, engulfs, and now I guarantee you, now price is probably gonna push up. In this case, it just kept falling. But now you see what I mean by these retail concepts don't work. And don't even get me started with indicators, because 90% of the time I used to use indicators and I used to trade this way. That's why I'm telling you guys it doesn't work. There's a reason why you guys are always strategy hopping and you're trading a certain strategy this week and trading another strategy next week, because the concepts don't work. If they worked, you wouldn't be strategy hopping and you wouldn't be changing your mind on all these different things of why the market is doing what it's doing. Because at that end of the day, the ways that I could show you with setups like this, I can explain to you why it's doing it, and then it will do it to the pip. As you can see, it goes to the pip. If it was random and what I not teach, but what I'm showing you guys what I do, if it didn't work, it wouldn't work so precisely. Like look at the way. Okay, let me just show you more examples of it not working. So let's just go to a random point in time again, just so I can show you guys. Let's just go right here or something. Okay, what do we see right here? We see, now this is retail eyes. You see a possible support and resistance right here, something like that. You're expecting price to possibly break down, to possibly come to another support right here, to possibly keep this overall uptrend. So I don't know, maybe you pull a fib from here or something, 50% of the fib. That's why I don't use 50%. I guarantee you the 50% is somewhere here. Yeah, the 50% is somewhere here. Pull the fib from there. Let's just put it to like right here. Okay, now you're expecting price to possibly retrace to this fib, keep this, maybe this trend line they're probably looking at or something. Yeah, maybe the trend line. And now look, you have multiple things right here in confluence. You got that trend line, plus you got this overall uptrend, plus you got a support under here. So let's just see what happens. Let's see. Price comes to it, starts rejecting. Ooh, it's rejecting the 50% now. So now you guys are in here like, okay, now I'm gonna buy off this trend line, stop below the low, and first target maybe up here somewhere to possibly keep going higher, something like this. I don't know, targeting up here, and then let's see what happens. Consolidates this whole time before stopping you out. Mind you, you would have been in this trade for a little bit. You probably would have took profit, because I know most people aren't going to stay in a trade for, what is this, 1 2 3 4 5, like 10-12 hours without barely being in profit. But look at the way things are going. Then okay, now you're looking at it like, okay, maybe it's at the 62% now. It's at this new trend line, possible trend line from here to here. You're looking at it like this trend line, maybe have a moving average here too, something like that. Now you're starting to break these highs, reject this, and you're like, okay, this looks like an even better setup. I took my L, risk 1% or something, stops below here, same target. Let's see what happens. Okay, in this case it worked, but you got to keep in mind it's not always going to work. Yes, these concepts will work sometimes, because there's a reason why there's profitable traders using these concepts. I'm not saying that is never gonna work, because it will work sometimes. It will work, but I guarantee you're gonna lose more than you win. And when you lose more than you win, if you don't have a crazy risk to reward, which a lot of people probably don't have, then you're not gonna be able to consistently be profitable, and your win rates are gonna be horrible. But yeah, it's possible. If you guys don't want to believe me and you still want to try it out, here I'll just show you another example where it possibly might work or something. Okay, so what do we see? Overall, keeping this uptrend, you know, maybe a wedge forming like here, maybe anticipating price to possibly go like this before breaking down, or do the same thing or breaking up. So let's just see, what else do we have? We also have a supporter resistance or whatever right here. We also have support right here being held. So let's see, if price comes down a little bit lower, we could possibly look to bring price up to look for shorts here, break and retest or something, break and retest to possibly keep falling. Let's just see what happens. Okay, price starts going up, comes down. Okay, we're at this area that price could possibly reject now. Break and retest, stops where? Maybe above this trend line, targeting where? This bottom trend line. Let's see what happens. Maybe even targeting this support right here. Let's see. Okay, ooh, stopped out again. But what else is happening? Maybe this is now your trend line that you're looking at. You're like, okay, it is traded to this possible trend line. It came to this support up here. You know, it makes sense. That's what you're telling yourself, that it makes sense. This, you could trade maybe here, looking for it to possibly keep this downtrend, because why? It's still making higher highs and higher lows. So you maybe keeping this up downtrend. You're printing bearish candles now on the lower time frame. Probably looks like it's falling to shit, but in reality it's really not. So what do? You try to get into a sell here. Put your stops above there. Target it here now. Let's see what happens. Oh, consolidates. Okay. This time it did work. It did work in your favor. If you would have held this trade for these multiple hours, 1, 2, 3, probably like 20 hours, if you would have held this trade, yeah, it would have worked. You would have took this W, but I guarantee you they wouldn't have held it. But if you did, then you would have won that trade. But the whole thing that I'm saying is that this isn't why the market is moving. If you guys want to be consistently profitable, you got to understand why price is going where it's going and the reasoning behind it. Because at the end of the day, it's not going here because there's a support here, resistance here. It's moving here because it had imbalances in these areas that price wanted to fill. What else it had? It had an order block right here. If you look on a higher time frame, it had an order block right here, which price is currently at and rejecting. Let's see what happens. Price starts moving up from that point, and look, comes to it again. But the thing is, it's not a support area. This is an order block, and on higher time frames, there's multiple other reasonings behind it. This is just a random example, so I'm not going to go too in depth to it, but there's a reason why the market is doing what it's doing. And if you look up here, there wasn't a support. There was also another order block here. And if you pull your fib from this level to this level, it was also rejecting these fib levels at one point. And if you look at this, April 22nd, maybe there was news here, you never know. But there's reasoning behind why price is doing what it's doing. And it's not because support and resistance, bearish pressure, buying pressure. There's reasonings behind why price comes to these areas so precisely before leaving them. Support and resistance, maybe it would have consolidated up here before stopping you out. But when you know you're on the right side of the market and you get into a trade, you're going to have little drawdown. And I've noticed that a lot of the times. Because if you look at this trade that I took earlier, I got in up here at these levels before price started to come down, came up again before coming all the way straight down precisely to a certain area, taking out these lows, and then going all the way back up. There's a reason behind all that. It's not happening for no reason. It's not because support and resistance. It's not because a trend line. Because at the end of the day, these biases can be switched like nothing. This one moment, this is a trend line. One moment, this is a trend line right here, breaks, and now what? This is a trend line, and then one moment, this is a trend line before it eventually gets broken right here. Now this is a trend line. Do you see why this is just nonsense and why it doesn't work? And I'm not hating on no one, because at the end of the day, I used to trade these same concepts, but I didn't start seeing consistent profitability and consistency in my trading until I started using the smart money, ICT concepts, whatever institutional concepts as you want to call them. And that's just what it is. I'm telling you from my experience, and many other people are saying the same thing. It's not just me. There's a reason why 90% of the industry is failing. It's because all of them are doing the same thing. So I'm just making this video for you guys. Send this to your friend that doesn't believe in the concepts, because I know from experience trying to explain to people why support and resistance doesn't work, and at the end of the day, that's what they've been taught to believe in. So I understand why they don't believe it. Same thing right here. People are probably looking at US 30 right now like, okay, yes, that's a support, major support, been here before. 34,700 is a big level. They're looking at it to possibly fall to come to another support, maybe right here. That's what they're looking at. At the end of the day, look at the way people are looking at it. So say people are looking at it like this, and they're expecting it to come to this trend line right here, match with the support. And the thing is, the reason why so many people believe it works is because it's simple. You can simply look and put this into a channel and simply find where areas come together, and you could be like, oh yeah, it might come here. But at the end of the day, if you look at the way I'm looking at the market, it's completely different. Yeah, I have a support area here, but it's not an area, it's an order block. And as you can see, it comes to the pip. Support and resistance won't come to the pip like this. And if you also look, imbalances with confluence with certain fib levels that are in an overbought market, certain highs and lows where price respects, certain London highs, New York lows, overall daily biases, and understanding where the liquidity is in the market. they are not looking at the market this way. Equal highs, 4-hour order blocks, 1-hour order blocks, imbalances within those order blocks, mitigated order blocks, and just understanding all these concepts. Yeah, it takes time. But if you want to make money, you're going to have to do the nitty gritty, and you're going to have to really get in depth, because when people are looking at it like this is the easy way to look at the market. And when multiple people and a lot of people are getting into the market looking at it at this certain way, it makes it easier for banks to manipulate you. There's a reason why people, oh, I got stop hunted or whatever. No, you're part of the big percentage of people that don't know what you're doing, and you're just creating liquidity for these banks to stop you out, to then run the price of anything in the certain direction that they then want to do it after they took you out of the market. Now they could run it, and now you're sitting here like, oh, I got stopped out. You try to get in late, then they stop you out again. You got to understand what's happening overall. But that's really it. Send this to your friends that still trade those concepts, because they're just gonna have a big headache trying to make them work at the end of the day. Send them my videos, send them ICT videos, all of that. But that's really it for this video. Hope you guys found it informational, and I'll see you guys in the next one.